Hey traders, this is Christian from Tribeca Trade Group with your midweek video on what to watch. And I've got one chart for you guys to watch right now, and it's probably something that you've never heard of, SHY. It's the SHY ETF as I refer to it. What is it? 1 to 3 year Treasury bonds. Why is this important? Well, it's because it's essentially cash balances. This is where traders go run and hide when there's a lot of fear in the market. So what is this telling us? Well, first of all, in the marketplace, we've got a little bit of volatility that's entered into the marketplace. Keep in mind, I know there's some notes floating around how it's many consecutive days of the market being down. No, we're not really down that much. We've have a few days of negative days, but they're really, really tiny negative days. For the week, we're only down about 1.3%. So while this may seem a little bit higher volatility than normal, sure, it is. It's just because we haven't seen volatility in so long. The market wasn't even down 1% either Monday, Tuesday, or Wednesday. So just keep that in mind going into the rest of the week. We have the election on Tuesday, and I think we're going to get more volatility coming forward. So let me just give you a quick glimpse at ETF fund flows. And the other thing, which I think is a misconception right now, is you're hearing about cash balances being really high or money outflows coming out of the equity market. Where that money is coming out of is mutual funds, and it's coming out of actively managed mutual funds. This is something that's been happening all year long. This is not something that is cash has not been coming out because of fear. It's because the product is bad and the product is underperforming. So while you hear articles about this a lot in the financial media these days about actively managed funds seeing outflows, it's kind of a misnomer. It's not because traders and investors are fearful, it's because the product stinks. So what I do is I watch ETF fund flows, and I'm going to tell you why this is important. SHY, again, 1 to 3 year Treasury bonds, big inflow today. Biggest inflow of any ETF, $458 million. So this is cash coming out of the market going into short-term bonds. Remember, funds are not getting paid to go into cash. So what do? They go into the next best thing. They go hide into short-term treasuries, which essentially is cash. So take a look. So what does this tell us? Why is this important? Let me just bring up a chart here. So this is the outstanding shares, the investment flowing into, that's the white line, flowing into the SHY ETF, essentially money going into cash. And this is the S&P 500 chart, graphed one over the other. Take a look at what happens every time there's market volatility, a big dip in the market. Cash balances go up. The balances in this particular ETF, this SHY ETF, go up. Notice we saw this back in February as well. Look at how high the cash balances were, or the investment going into the SHY ETF as the market went down. Take a look at what's going on now. We're not there yet. The balances have not gone up into short-term treasuries. So I think, so while this is a good sign for the market in terms of we're starting to see money, we're starting to see some fear in the market. There's $458 million of investments that went in on Tuesday, and we can see this T+1. So today's Wednesday. The second, we can see this activity, and it's evidence of what's going on in the marketplace. You can see this T+1. So we're going to look for the next couple of days to see if we see more money rushing out of equities and into short-term bond or cash funds. So again, this is where it's at right now. This is the cash balances. This is the level that they got to back in February, and this is where the market was. What I'm looking for is for this line to come up and crisscross over where the SPY is and get to a heightened sense of cash coming out. So again, we're not there yet. So sit tight, and as we've been advocating in our newsletters for the last couple weeks, I think you want to be in. What I'm doing is sitting in cash right now and waiting for this to come out. Option activity is telling us the same thing. No buyers whatsoever today in the market. Very, very little call buying whatsoever. This call buying that we did see, very, very small in terms of dollar amount, in terms of threshold buying into there. So again, what I'm doing is sitting on my hands, waiting till the election, waiting till there's some uncertainty that's taken out of the market, and then I'll look for buyers to come in, and hopefully these cash balances will be higher at that point. Thank you very much for watching today's video, and have a great night.